Good evening, and welcome to today's market update. Let's start with Wall Street. The three major indices closed essentially flat last night. The Nasdaq finished at 25,358.60, the S&P 500 at 7,357.49, and the Dow at 51,920.62, with virtually no change from the previous session. However, pre-market futures are showing some weakness. Nasdaq futures are down 0.37%, S&P futures are off by 0.02%, and Dow futures are down 0.01%. This suggests we could see some pressure at the open today. More importantly, the VIX, often called the Fear Index, surged 8.43% to 20.20. That number is now at the upper edge of the normal range, indicating that market sentiment is shifting from calm to anxiety. The drivers are clear. Uncertainty over the Federal Reserve's policy path and rising geopolitical risks are fueling this move. Meanwhile, Bitcoin has fallen below the $60,000 mark. The iShares Bitcoin Trust, ticker IBIT, has dropped 8.85% over the past 7 days. Money is flowing out of risky assets. Now let's look at the global macro picture. The yield on the 10-year Treasury note is at 4.4%, up just 0.14%. Liquidity expectations haven't tightened significantly, but concerns over an economic slowdown are keeping a lid on any upward move in rates. The dollar index, DXY, fell to 101.08, declining 0.29%. That weakness is providing some short-term relief for emerging market assets. But the Chinese yuan hasn't appreciated much, which tells us depreciation pressures are still there. West Texas Intermediate crude oil dropped to $69.63 a barrel, down 1.47%. The combination of economic slowdown fears and a temporary easing of tensions in the Middle East is weighing on oil prices. Spot gold, on the other hand, rose to $4,066.10 an ounce, gaining 0.86%. A weaker dollar and safe haven demand are pushing gold higher. The medium to long-term trend for gold remains clearly upward. So to sum up the global environment, we are firmly in a risk-off mode. The only way this changes is if the VIX falls back below 18 or the dollar index rebounds above 102. Only then could we see a phase shift in risk appetite. Now let's turn to the renminbi and the external environment for Chinese assets. The onshore dollar-yuan rate is at 6.7896, and the offshore rate is at 6.8032. Both have appreciated slightly over the past 24 hours. The central bank's fixing rate remains on the stronger side, so near-term depreciation risk is manageable. But after yesterday's sharp sell-off in A-shares, there is pressure on northbound capital flows. If the yuan repeatedly tests the 6.80 level, foreign investors will become more reluctant to increase their allocations. On top of that, US-China tech frictions are escalating. According to a Reuters report from June 25, the U.S. Commerce Department plans to further tighten export restrictions on semiconductor manufacturing equipment to China. New rules are expected in the coming weeks. China's Commerce Ministry has responded by saying it will take necessary measures to protect its interests and is studying export controls on key minerals like gallium and germanium. This tit-for-tat dynamic will directly impact sentiment in A-share semiconductor stocks. For today's A-share market opening, we expect a lower open with high probability. The three major indices suffered heavy losses yesterday. The Shanghai Composite fell 2.26%, and the Chi-Next board dropped 4.07%. Add to that the weakness in pre-market U.S. futures and the negative news on tech restrictions, and the market mood is leaning bearish. The only scenario that could lead to a flat or slightly higher open is if the FTSE A50 futures turn positive before the open, or if northbound capital inflows exceed 10 billion yuan in the first 15 minutes of trading. For the session itself, the Shanghai Composite is likely to trade in a weak, range-bound pattern. We assign a 55% probability to a downward drift, a 20% chance of a technical rebound, and a 25% chance of a double bottom test. The key support level is the 4,000-point round number. Yesterday's low was 4,020. If that breaks, the next support is at 3,950. If the index can bounce above 4,060 within the first 30 minutes of trading, then the bearish expectation would be invalidated and we would shift to a sideways view. In terms of sectors, the two most likely to be active today are semiconductor equipment and materials. The logic is domestic substitution, which gets a direct catalyst from tighter export controls. The other sector is national defense, driven by ongoing geopolitical tensions and the concept of countermeasures. But be careful. Regulatory tightening pressures semiconductor equipment sentiment in the short term, even though the medium to long-term logic for domestic substitution is actually strengthened by these moves. You need to watch for capital rotation at the individual stock level. On the risk side, stay away from high-valuation small-cap tech stocks, especially those in the optical module and silicon photonics space. Also avoid crypto-related stocks. The Chi-Next board fell more than 4% yesterday, and it could continue to drag down the growth style today. Northbound capital is likely to see net outflows. If net outflows exceed 20 billion yuan in the first 30 minutes, the trend is confirmed. If they narrow to less than 5 billion, we could shift to a sideways view. One sentence core judgment for today. Risk aversion dominates. A shares will continue to adjust. Domestic substitution and national defense are the only structural lines of defense. Now for the stock radar. On the opportunity side, Micron Technology, ticker MU, has a 58% probability of a rally that fades or high-level consolidation. The time window is 1 to 3 trading days. The trigger is strong demand for HBM and DDR5 from AI data centers, along with a cycle reversal in memory chip prices. Applied Materials, ticker Applied Materials, has a similar setup. For positions, Sumitomo Electric, Hammond Power Solutions, Coherent, and Air Test Systems are all relatively resilient. We recommend holding them. But POET Technologies has a 65% probability of downside risk. We suggest exiting that position. For stocks to avoid, AXT Incorporated is down 43.75% in a month with extremely high geopolitical risk and heavy insider selling. Exit that position. Akoustis Technologies is up 56% in a month, and its catch-up progress has reached 100%. Take partial profits and keep only a small position for observation. Our probability assessment for today is 20% for an up move, 45% for a sideways move, and 35% for a down move. Overall, the market remains in an adjustment phase. Investors should stay cautious, manage their positions carefully, and wait for clearer signals before making any aggressive moves.